Dave here with another video. Today I want to talk about money market accounts and why everybody should have one. Let's get started. So why does everybody need a money market account? You need a money market account because you need a storage bucket to be able to put emergency funds in there or any other funds that you're used to saving up for an investment or for a down payment on a house. If you're putting that money inside of a bank account, savings account, or a checking account, you are losing money. You're basically flushing money down the toilet. So if you don't remember, back in 2006 or 2007 timeframe, money markets were very popular. There was something like an ING Direct, for example, that paid over 5%. We have not seen those rates since the financial collapse in 2008. The reason why that money markets have been popping up recently, in say 2018 to 2019, they became popular because interest rates have risen from basically 0% for a decade up to 2.5% currently. So money markets on average pay about 2% to 2.3% or so, depending on where the bank is. So for example, let's go ahead and log into my Chase bank account and look at the savings account and what they pay on money that's just sitting in the account. So we're logged into my Chase account and we're looking at the Chase Plus savings account, which, that when I opened this account, it was kind of their top tier savings account, okay? So here it is, July 2019, and the interest rate is 0.03%, okay? No wonder I have $1 in there, okay? You're basically losing money. If you stored, 10, 20, 30, $100,000 in this account, you're gonna make pretty much zero. Why would you leave your money in this account, okay? You're throwing money down the toilet. Let's go ahead and log into my Capital One Money Market 360 account and compare the two. So I'm logged into my Capital One 360 Money Market account, and you can see my balance is, $18,598, and the annual percentage yield is 2%. Okay, now that's not the highest yield you can get out there on one of these accounts. There is other accounts out there where you can get a slightly higher one, maybe 2.3% is about the highest I've seen. So, you need to shop around. There's different requirements, and we will go over that in a minute here. Interest in July, $16.96. That pretty much goes up every night if you log in and look at it, depending on how much your balance is. So look at this here though. This is the important part. Interest in 2018, $938. That is basically money that you would have wasted and thrown down the toilet, okay? Had you left your money inside of a bank account, okay? Look at this here, 2019, year to date, so that's $651, and it's, the year's half over, right? That's just money that basically is free just for keeping the money in the account. This is the reason why you need a money market account. Let's go ahead and pull up a website here that has a list of money market accounts. If you're interested in looking at money market accounts, I will show you some things to look out for and, kind of just do a comparison between them. Here's a list of money market accounts, 8 best money market account rates, okay? And the date is June 3rd, 2019. So that's pretty up to date. It talks about what a money market account is and all that, and compares it against basic savings account and CDs. If you don't know what CDs are, they're basically certificates of deposit. However, there is a major drawback. If you have emergency fund or something like that in a CD, then you are pretty much stuck. You're locked in for 3 months, 6 months, a year, 5 years, 3 years. So CDs are not a good option for what we're talking about here. Short-term holding bucket, or you're saving up for a house or something like that, do not put it into a CD. Put it into a money market account. That way you get at least 2%, right? If the inflation is, whatever the inflation is right now, if they tell you it's 2%, it's probably higher than that, but, get something on it that way, or at least breaking even, right? So let's go ahead and compare these here. Let's take a look at some of these. Let's go ahead and take a look at the Capital One 360 Money Market account. And it's, let's see, it has a 4.5 rating, a 2.00% APY with a minimum balance of $10,000. Now there is a little caveat to that, and I'll tell you in a minute. Let's take a look at another one here. Citizens Access. Never heard of it. Pays 2.2%. It's got a decent rating with a minimum of 5,000. Okay, let's take a look at Discover here because everybody's probably heard of them. 4.5 rating. That's really good. Okay, but it pays 1.9. That's okay, right? With a minimum balance of $2,500. That's actually pretty darn good. So you notice on here that they say member FDIC, member FDIC, member FDIC. That is super important. Make sure that the bank account that you get a money market account with has that listed on their website for the account. Okay? Why is that important? That's important because say another 2008 happens again, then it's possible that these banks could go under, right? You need to make sure that your money is protected. Okay? There is some more rules behind that. Okay, there's an allowable limit, so I think it's like $225,000 the last time I looked. So if you have more than $225,000 in a bank account, and this goes for any bank account, okay, I think checking and savings and everything, all that included, okay, you need to start spreading that money up. If you have $1 million, you need to spread that money up. That way you're protected, okay? Let's scroll down here a little bit and look at another one. Okay, look at this one here. Popular Direct. Never heard of it. It has it okay, well, the rating's actually really bad, compared to the other ones anyway. 3.5 rating. It's got a really good APY though. 2.36%. That's pretty darn good. That's higher than the one I have, right? With a minimum balance of 5,000. But it doesn't say it's FDIC insured, which is kind of odd. So most likely it is. So the best way to find out is just go to the website, and usually on the very first page, at the very bottom, it usually tells you about their FDIC information. So, here's a couple other ones. Kind of just reviews some of their other requirements here. But let's go ahead at this point and take a look at the Capital One main page if you were going to open one of these accounts. So we're on the Capital One page here, and if you want to look at the requirements for the Capital One account, you just go to checking and savings, and then you kind of have a list of the savings options here. And as I mentioned earlier, you got CD options here, and you can click on that and see that. You'll see that you're locked into a 3-month, 1 year, a 3-year, a 5-year. But not for much more yield. It's like literally, 0.3 to 0.5% more. That's not, gonna work. That's not gonna work for an emergency fund, okay? You need to make sure that you don't lock your emergency fund up in a CD, okay? And let's just go ahead and pop up the money market one here. Take a look. And basically it kind of gives you a rundown of what the account's about, okay? It's basically tells you what it is. It's a high yield, fee-free online bank account that helps you save, okay? And it pays 2%. We saw that earlier. And that pays 2% on balances over $10,000, okay? Anything less than $10,000 with this particular account pays 0.85%, okay? It's fee-free. That is key. Make sure when you do your research and you're looking for a money market account that it is fee-free. You do not want fees eating your account. And as I said earlier, make sure it is member FDIC insured as well. So here's what I was talking about earlier. Anything with 10,000 below, it's 0.85%, and anything with 10,000 or more is 2%. Okay. Now, if the Fed raises rates, and I know they're talking about recently cutting them, these rates could go up as well. So if the Fed cuts, then it's a different story. These rates could go down. Let's go back to this page real quick here and just talk about this savings account. So this savings account, how is that different from the money market account? Well, it pays 1%, and that's with basically any balance. Okay, so if you have less than $10,000, it will pay 1%. So that is more than the money market account. But that's all it pays. If you have $100,000 in there, it's just going to pay 1%. Okay. Now there is a couple other caveats to it as well, like the fact that maybe you can't withdraw, more than 6 times a month with the money market account, but the savings account you can. So you just need to check that. Every bank is different. For Capital One, you can only withdraw 6 times in that month from that money market account. So most people don't have any reason to do that anyway. So at this point, let's just sum this up. So you need to get your money out of the bank because you're losing money by leaving it in there and getting 0% when inflation is 2%, okay, or higher, and you're basically wasting money. So your emergency fund, you need to get out of the bank account, you need to get out of your freezer, you need to get it out from underneath the mattress, you need to get it out from wherever it is and stick it in a money market account, okay? I don't care what one you open up, do your own research. I'm using Capital One. I will show you a link as well if you want to sign up with the Capital One. The reason I signed up with the Capital One account is because I already had a couple of credit cards with them, and it took me 5 or 10 minutes to open up this account. So, not to mention, they also gave me $200 of free money because there was a lot of promotions going on. Like I said, money market accounts got real popular again as interest rates came up. Here's the link for the Capital One. If you do want to sign up, you can use this link. I believe that you'd get some free money out of this. So, like I said, there is no obligation at all. It will be down in the description as well. So if you got anything out of this video, go ahead and give me a thumbs up. Go ahead and subscribe. I got more content coming out. And we'll see you in the next one. Thanks for watching.